In this short video, I'm going to take you through some accounting issues that arise as a result of an employee compensation tool called restricted stock. We're going to specifically look at three issues that arise from issuing restricted stock. And the first is, what are the transactions that occur on the grant date? Second, we're going to look at an adjusting journal that's typically required to record the compensation expense related to restricted stock. And then finally, we're going to look at the accounting for forfeiture of restricted stock. If you haven't had a chance to go out and try this problem on your own, you can see it listed right here. It's kind of small here. You should go out and pull the PDF off of the course website and attempt to do the problem prior to me walking you through it. So go ahead and pause the video if you haven't already done this, and I'm going to start walking you through this problem. I have to apologize for any feedback you're getting here. I'm not quite sure what technical problems I'm having, but hopefully you can work through that to get something out of this video. So the first thing I'm going to take a look at here is what happens on the grant date when we issue the restricted stock. And this is much different than when we issue stock options. So I've just pulled some important data out of the problem. With the par value per share is $1. The fair value per share at the grant date is $12 of each share of restricted stock. This is very important. The number of shares that we've awarded are 5 million shares in total. That's also very important. And the service period will become important later, and that'll be 4 years. This is typically equivalent to the vesting period. So the first thing I want to look at is how much compensation am I actually awarding my executives over the term of the contract or the service period. And so logically I would take the number of shares that I've awarded, which is 5 million, and I multiply that at the time at the fair value of the shares on the date that the restricted stock is actually granted. So what I've done is I've awarded $60 million of compensation to my executives. Now, that being understood, the accounting problems that arise are, where should this thing be classified? Should we record any type of an entry at the time we grant this restricted stock? Has anything really happened? And so I just have an income statement over here and a balance sheet. And what really happens on the date that we grant the restricted stock is we've really issued the stock. Now, it's got some provisions in it that say that it can't be actually sold or traded or anything until the service period is completed. But what we're going to do, it's going to be kind of like a prepaid expense. And so we're going to take the full $60 million and record that as an asset. And that's what unearned compensation would be. So that would show up over on the balance sheet. And we're going to issue the stock at the par value into common stock. So I would take the number of shares issued, which is 5 million, times the par value per share, which is $1. So I've actually issued $5 million of common stock, and to make the transaction balance, I take the remainder and I put it into paid-in capital in excess of par value. So at the grant date, this is what I do. Now notice that none of these transactions have touched my income statement. Everything is housed on the balance sheet. I've got two equity accounts here with the common stock and the paid-in capital, and I have my unearned compensation as a prepaid expense. So I would show, so the second transaction that's required as an answer for this problem is really asking when the year is over. Now it's December 31st of the first year that I've awarded the restricted stock. Is there anything I need to do at that point? And if you reflect back to the very first transaction, we recorded everything on the balance sheet. And so the accounting profession has said, that's really not accurate. We've got this contract where we were awarded compensation in the form of restricted stock, and that really has a value that we need to spread over 4 years. And so we need to take some of this $60 million and spread the expense out over 4 accounting years. So what we have to do at the end of the first year is show part of this expense being amortized, if you will. So $15 million of the unearned compensation should be pushed into my income statement by crediting the unearned compensation, which is an asset, reducing the asset, and increasing an expense of some sort. So the adjusting entry at the end of the first year is going to be debit compensation expense for 1/4 of the contract amount, which is $15 million, and I'm going to then reduce the prepaid expense by the same $15 million. Now this is the same transaction I would make over the next 3 accounting periods at the end of the year to show that portion of the compensation expense that's supposedly being awarded for that corresponding year. So this same entry would be made over and over and over again until the vesting period or service period of this contract has expired. So the last accounting issue we're going to look at in regards to restricted stock is what happens if the restricted stock is forfeited because the employee either quits or is fired or for some reason doesn't fulfill the vesting period. So this is rather interesting in how we handle this transaction, but first we need to take and look, just get a perspective of what's already happened within the unearned compensation expense account. Is we booked the $60 million at the date of grant, and we amortized 1/4 of that into the first year's income statement, reduced the profit correspondingly. And so now what has happened in this problem is it's the first day of year 2, and for whatever reason our executives are terminated. They did not fulfill the vesting period or the service period of that contract, and we need to figure out what do we do at this point. So really what's going to happen is the stock is restricted. It has special restrictions with it. We're not going to actually award it. And so when we initially, if you reflect back to the very first transaction created on the grant date, we had credited and thrown some common stock and paid in capital into our equity portion of our balance sheet. Now we got to go ahead and remove that because it's actually not going to be awarded. So I'm going to basically undo that transaction by debiting my common stock for the $5 million I had originally put in there, and also debiting the paid in capital in excess of par by the $55 million that I originally had put in there. Now that might make sense. However, this next portion of the problem is a little less logical. What I have to do at this point is zero out this unearned compensation expense, prepaid expense account. So currently there is a debit balance of $45 million sitting in this account. So logically I have to credit $45 million to make it go away. The balance would then be zero. So unearned compensation gets reduced by $45 million. And we have a gap here now of $15 million that we had previously expensed. Now this might be somewhat controversial. However, the FASB currently says that we account for the forfeiture of restricted stock on a prospective basis, meaning that any expenses we had previously expensed need to be reduced in the current period going forward. We do not restate prior financial statements, and so therefore there's no prior period adjustment. We simply take the $15 million compensation expense that we had recorded in the first year, and we reduce that going forward. So in essence we have a negative, if that makes any sense, compensation expense for $15 million. Might not be too logical, but that currently is the way the profession handles forfeiture of restricted stock. And so at this point you can see the prepaid unearned compensation expense would have a balance of zero. My income statement's kind of goofed out for the second year, and the equity has been removed from my balance sheet. So that concludes the accounting for restricted stock.